And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. And welcome to my podcast. Notice what's going on. We have, again, the market is back down. Because, guess what? Oil is back up. How'd that happen? And yields are back up. How'd that happen? Everybody told us, look, when just a few days ago, Monday, when we woke up and we're at 4.4, the yield, everyone say, wow, look how strong the economy is. That's a wonderful economy, 4.4. Well, it's not true. That was a lie. Okay, and everybody knew it. Here's what's going on. The biggest problem we have right now is our deficits. And we're really in trouble with our deficits because we have to pay our bills. And the government needs money every day. And the deficits are huge. So how do you raise money to pay our deficits? Keep the electric on. Keep our payroll. Well, they'll sell bonds to raise money. Now, people will buy our bonds, but they want short-term bonds, 4 weeks, 7 weeks, 12 weeks, 13 weeks, whatever. They don't want to do 10s, 20s, and 30s. They want to do 4, 6, 8, 13 short-term. They don't want to get caught with long bonds. But the government can't give them what they want. Because, again, the problem with our deficit, and we owe so much money that when you say to folks, hey, loan us money, we'll pay you short term, then they turn over every 4 weeks, 6 weeks, 8 weeks, and that's when they can ask for more interest and more interest. Before you know it, the government's in real trouble because the interest rates keep going up. So they want to sell to the folks your typical 10, 20, and 30 year. So what happened was when we hit 4.4, nobody wanted those. They wanted the short term, but the government said, no, we're not going to sell short term. So here's what happened. So they had to come up with a scheme that they could convince people to buy the long-term treasuries. So what they do, they create a story. Go ahead and play it.
We had the best economy in the history of our country in my first term, and we're blowing it out now. We're blowing it away now.
Oh, that's not true. Okay, that's not true. So what happened, if that was true, then why is it that people are in such trouble with their credit cards? They're behind with their payments on their house. They're behind on they owe more on their automobiles than they're worth. So what's happening is they decided, all right, here's what we got to do. We got to get these people to buy our damn bonds. But we can't do short term, we get to buy long term. So why don't we do this? Let's tell everybody the economy is really strong and good, and then we'll tell them that we're making a deal with Iran. Now, how many times do you hear, every week, we're close to a deal. Talks are progressing. We have the things are going well. We're meeting with the right people. Every time, it's always one of these, cooked up statements that works, because when you put a statement out like that, oil will drop. And when oil drops, inflation drops, and when inflation drops, bond buyers then want to buy 10, 20s, and 30s. They don't want the short. So what they do to raise money to pay the bills in Washington, they will embellish how good our economy's doing, and then they will always create these statements that people will think, oh, the war's over, and oil starts coming down. And then they'll sell those 10, 20s, and 30s to their stable of buyers, the same people. The stable means that U.S. banks and foreigners will always buy those 10, 20s, and 30s. Well, the problem in doing that, it's not the truth. So what happens is that, and again, if we had this great economy they're talking about and it's so strong, then why is it in 2020 we had 2.1 trillion in savings? Now we got zero, almost zero in savings. So what they've been doing is they've been creating a fantasy land by telling us how great the economy is. And then they'll turn around and announce that they got a deal cooking with Iran. And then oil drops. And then when oil drops, bond investors are no longer want to invest in the short term. They'll do the 10, 20s, and 30s. So what happens then, they'll buy, and then the bond yields go down even further. Remember, bond people want to buy the yields when they're higher. So if you have a good bond yield today, and they'll go and buy, all of a sudden it's an announcement that we got a deal with Iran. That means inflation, anytime you hear inflation is going to go down, anytime there's anticipation inflation is going to go down, bond buyers will start buying 10, 20s, and 30s. So that's what they've been doing. They cooked it up. So that's why you saw the fighting stop, and now we've gone into these series of announcement after announcement after announcement that how we're close to a deal. That's how they're able to sell bonds to pay our bills. That's what's going on. It's very dangerous to do because our deficits are so bad right now, okay? You got to raise trillions and trillions of dollars, and you can't raise trillions of dollars with, using 4 weeks, 6 weeks, 8-week T-bills. You gotta sell 10, 20s, and 30s, but you're deceiving the people when you keep making statements that we got this deal cooking with Iran, everything looks good, and then all of a sudden oil drops. You notice that? Almost every week we get a statement and the oil drops. And they keep doing it on purpose to get the oil to drop, because what comes after the oil drops? Inflation drops. And that's good news for bond buyers. When inflation drops, they want to buy the 10, 20s, and 30s. And that's what's going on. So the problem with that is what happened today. All of a sudden, it's unraveling again. Oil's going back up. The bond market's going back up. Your yields are going back up. So we have this unstable market by creating announcement after announcement, okay, that we're close to a deal when we're not. So again, to try to fix this mismatch, okay, where we're offering these 4.4% yields, and they're telling people they're doing that because the economy was great. No, just the opposite. They're offering the 4.4 because things were bad. They couldn't sell treasuries. They couldn't sell the long-term treasury, only the short-term treasury. It didn't work. It didn't work. So they panicked, and they come up with this new story that they got a deal cooked up with Iran and everything's okay. And then people say, oh, good, the war's over, oil's going down. That means inflation's going down. I better buy some bonds today. I'll buy them today to lock in that high yield today. And this is very dangerous. So I was telling my traders this morning, you got to be very, very careful, because when you keep hearing how, here, play that cut again.
We had the best economy in the history of our country in my first term, and we're blowing it out now. We're blowing it away now.
Okay, if that was the case, as I said, why on earth is it that savings have dropped from 2.1 trillion from 2020, 2022 to near zero? Why is it that wages aren't keeping up with inflation? Why is it credit cards are maxed out and the banks are really going after credit cards like they never did before? So you got savings that are collapsing, credit cards are maxed out, automobile loans, we've never seen so many cars upside down, they owe more than they're worth, and prices are too high. So, and now remember, we got to pay our bills. We need money. So every day they're going to, or every day or every week, they're going to go and say, we're close to a deal, talks are progressing, de-escalation is possible, a framework is emerging. I don't know who puts these together, but they got a whole boatload of them, and it works. So the problem is that when oil drops, they just got to get one of those sentences to make oil drop. And as soon as oil drops, they believe inflation will drop. And then they'll buy these long-term yields. Now, what makes it dangerous is that look what happened to us this past week. We opened up, oil was $102.70, and then it dropped down to a low of $88.66. Then it closed at $95. We're all over the place. And hedge funds are covering their short positions, so it looks like the stock market's going up. And again, what's happening is it looks like when stocks are going, oh, this is good, boy, look at how stocks are going up, right? And none of it's real. So what you have to do when you're trading, you've got to always depend on price trend. We all do the same thing, that we'll take a list. Here, I'll do this for my gang members. We break down our stocks for our gang members so they know which stock groups are low yields and which are high yields. So for example, high yields are the ETFs, XLI, XLB, XLE, which is energy, XLF for banks, so forth. And then we have the low yields, are tech, XLK, utilities, those sorts of things. The communication services stocks. So the reason why professionals always break out which groups love low rates, which groups love high rates, because normally you can trust it. So people start investing money, they, oh, rates are low, so I'm going to be in this group. But we find out it's a sham. It's a sham. So you get caught in these groups that, like today or yesterday, you're buying stocks because yields were going down. So you're buying stocks that had low yields. Today, oil went back up, yields are going back up. So now you're finding yourself in the wrong stocks. So how you have to trade is always trade following, not the noise, but following the trend of money. It's price trend. So your price trend is in a situation like this, where they're not telling us the truth, where they can't sell short-term T-bills, they got to borrow from people long-term, and they have to do that by lying to them and telling them the economy's great, everything's great, and that so that they'll, and inflation's coming down. Remember, the minute they hear, bond buyers, the minute they hear oil's coming down, that means inflation's coming down. As soon as they hear that, bam, they're back in there buying 10, 20s, and 30s, right? See? But what's happening is, like today, it didn't work. Now it's going back up the other way. Tomorrow it'll come back down the other way. You're all over the place. But if you know how to trade the trend, which is price trend, and I put some stocks up just to give you an idea. For example, we're in some nice stocks that have a good price trend. For example, KRE, small mid-cap banks, we're in that stock, ETF. It's got a beautiful consolidation going sideways, and it can break out or it can break down. Now, what we have is, remember, they like high yields. But guess what? When yields were going down, because we were told that we have a deal with coming close now with Iran, and then all of a sudden oil started to drop, inflation started to drop, bond buyers started to buy 10, 20s, and 30s, pushing that inflation down, right? And everybody's saying, well, okay, so I'm going to go buy stocks based on that. No, professionals are saying, well, hold on, I'm going to buy the stocks that are based on my price trend. So, like KRE is a good price trend. So that's how, when we're in this kind of situation, you're not telling us the truth about the economy and the health of the economy and the yields. You'll be fine if you know how to trade the price trend. You don't have to worry about it. We'll help you with it. philsgang.com.